All right, good morning, everybody. Let me finish up this Zoom piece and you'll be able to see what I see. All right, so we had a little bit of run up in Hong Kong's markets. We should be able to get a little bit out of those ADRs today. It's about time. I mean, more likely due for a snapback than anything else. So a little bit of mean reversion at the least. Behind that, we have the Russell. And at the least, we have the Dow basically flat. It is CPI day. It's the big day. It's what we've been waiting for all week. When it comes to things that are going to happen in January, and especially this week, we're going to be kicking off the start of earnings with banks on Friday. We have the CPI numbers. We're going to be doing an FOMC later, and we still have January options expiration, so OPEX. But for today, it's the CPI. So a really big deal. This could shake the rest of the month. You know, this is going to go to the heart of the Fed and whether or not they're going to actually start cutting in March, which we're all kind of looking to January's FOMC meeting with a little bit of hope that they're going to give us some of that forward guidance and maybe give a little wink and a nod to what it is they want to do going forward. So we can see the impact level of the things that are going to report today. We do have the 30-year auction. So this is a biggie. I know we're supposed to, treat them all impartially, but I do like that 30-year. And at 1 o'clock today, we're going to get it. So a little bit of a heads up there. You can go back and look at different auction days where we had a 1 o'clock event and see how many times it happened to have been the high of the day before we fell like a brick, or it was the low of the day and we took off like a rocket ship. So, make no mistake about it, that 30-year, even though they don't have it listed here as a high impact event, it has that capacity. So definitely want to keep our eye on it. At the end of the year, at the end of the month, not the end of the year, we're going to get some treasury data out, right, from Yellen. Little bit of an intervention, so to speak. So there's that as well. The last one was the 1st of November, and you see how the markets have been moving since then. Of course, it was, FOMC in November and all the other data points that came out with it, but still, it started November 1st or 2nd last year. So these are the forecasts from different places. When I was newer to trading, I always loved getting my hands on something like this, not really because of the forecasts, but because of these investment firms, these investment banks. We talk about they and them a lot, but we don't have a name for it, right? It's just this vague entity. Oh yeah, they're bidding it up. They already priced that in. Here's your list of they. It's not a full and thorough list, but it gives you a name and you can search these names. You can find their social media. You can find their educational services. A lot of them put out newsletters for clients and investors. And surprisingly, it all ends up in the public. I guess maybe not so surprising. And you can get your hands on it. So you can get a forward outlook for the next quarter, the next month. I know that every one of these firms put out a 2024 prospectus giving their opinions and discussing the threats that they saw to the market and where they think money's going to go this year, just for an example, right? So a list like this can take you a lot farther than just their CPI forecast. Yeah, we are going to get some jobless data too, but the big one is going to be the CPI. And the cryptocurrency, is kind of they didn't pass everything. And there's some nuances in there. Kind of need to flesh out a little bit more. I haven't read it all yet, so I'm not going to dig too deep into it. But when it comes to trading Bitcoin products, you can trade Bitcoin futures on Trade-of-8 in the smallest size. They're called nano, to where you are risking nothing more than 5 cents. That's not rounding or using any kind of, like optionality where 5 cents would be $5. No, that's physically, literally, you're risking 5 cents. So you can trade Bitcoin futures in the smallest size imaginable. There's no reason to have to go get a different platform and expose yourself to wide bid-ask spreads and anything like that. You just trade the futures. Oh boy. A little bit of news on crude just coming in. Yeah, that's going to bid up. All right, well, that ought to take it up a bit. We'll see how far this goes. But with that news, we're going to see an escalation. Supply disruption, I believe in this case, is going to trump demand destruction. So, yeah, we'll see how it plays out. We do have a nice trend line breakover setup, should get us easily into 76. And from that, we can just measure the zone, and that will give us 80 and then 83. That just hit. So we'll see what they do with it. The news is Iran seized a U.S. crude oil tanker on a legal order in the Gulf of Oman. Yeah. Okay. All right. The dollar did not hold support. Looks like we're going to break that 102.20 moving average that we had down there. It's the 10 MA. So we get a break down from basically 102 in the dollar, then should get a little assist. But remember what we talked about the other day. It's not the idea of the dollar going up or down per se, right? That's not what our focus is as much as it used to be. Instead, it's where is the dollar at? What dollar level is it at? Eight 30, 10:30, 11, 11:30, 1 o'clock, and 2 o'clock. We got a treasury statement. Again, you can search for it, right? Run a search on Yellen, see what she's up to. She's going to be chipping her teeth about something. And should be like a quarterly rebalancing QRA, I believe it. Yeah, QRA at the end of the month. So for the ES, we got a market maker move, and we have normal volume. I got to say the volume's not as light as I would have expected if we were going to see a market maker move this morning. So more volume today than we had yesterday. They are hedging, so we can see that market maker move up here. Usually if they're hedging, they'll sit out a little bit. The volume will be a little lighter. They're not sitting out, they're in it, which, I mean, is fine. It doesn't throw anything off, really. It's just normally they don't hedge and participate. We are above the weekly pivot point, and this morning we're above the daily pivot point, which puts us in an MDP. It's a missed daily pivot. We haven't hit it yet, so it's a MDP. Really, that won't come into account until tomorrow, right? We don't use an MDP today because until the end of the day, we don't technically classify it as a missed pivot yet. We did make it through that green voodoo line. I believe that one's called Forest. They've got some funky names for their voodoo lines, but it's all right. The weekly pivot point is a long ways off, right? It's all the way down here at 47.55. Now, there's a little bit of, reversion to the mean idea out of this, that we don't want to get, quote, too far away from that thing on a week-to-week basis. I don't think we're there yet, but we're getting a little close, right? And on an intraday basis, we could certainly expand a little farther than this. But that is the threat, right? That we move too far, too fast, we overshoot it, and we expand beyond it too much. Because we will mean revert if we get too far away from it. With our levels for the day, we've got a 21-day average daily range. And we're leaning closer to the upside than we are to the downside because we rallied since opening last night. When we open at Globex 6 o'clock, these levels are all set. So they were set from when we were at 48.19. Obviously, we're 10 points closer than we were when they were set. And we got closer to that upside than we did to the downside. I don't count that yet, though. If we were, maybe within a point or two, then we could consider having hit it, even though we didn't, right? It was close enough. But this isn't close enough. This is 5 to 7 points away. So on the other mornings, when I said we've already hit one side, now we can go hit the other side, we can't say that today because we haven't hit it yet. Also, this was a move through the kill zone, and basically it just reset itself, right? 2 o'clock to 4 o'clock. So we got the move, and then it unwound the move in the same breath. It's just done and done. Since we opened above the daily pivot, that puts us automatically in a bullish bias. That doesn't mean that we would immediately go long, just that we would look for long opportunities. And if none present themselves, then it's because we are continuing to fade down to that pivot. So what I'm doing here is I'm loading a VWAP that started at the first of the week. It's a Monday VWAP. This would be an anchored VWAP just from a week-to-week basis. And of course, we'd want to run another VWAP from the first of the year. You can also run an anchored VWAP from the biggest gap, or from the largest volume area, or from the last contract change. There's a lot of different ways to run the anchor. I just wanted one for the first of the week to kind of see how far away we were from that level as well. So with this CPI data today, it's not going to matter where our pivot points are when the data comes out, right? In the initial drive. This is our chance today to get a gap close play. I've talked about this before, but if you haven't seen it, there's not a physical gap like you would imagine from, say, a close at one level and opening up at a different level. That's not the way that these gaps work. So I got some old examples of liquidity gap, and we get this strategy or this opportunity all the time, right? Every day, anytime you get a really big candle like this, you've got a liquidity gap that you can trade. But on CPI day, PPI, and non-farm payrolls, 3 opportunities every month, you have the possibility of this trade setting up. So what we want is a single candle direction, up or down. I don't care what way it goes. And it closes near the end of that candle. It doesn't pull back and leave a massive wick behind. And it certainly doesn't pull back to close near the open. We don't want wicks on each side. We just want a single directional push. That is the gap that now needs to be filled. And the market works its way back. Notice it got there by 11 o'clock. So here's a different example. It's a positive. Same thing. Big push, single direction. That's the gap that needs close. It worked its way back to get that gap closed. It got there around 11 o'clock. And another example. Now this one had multiple candles, but still all in the same direction. And even on that first one, it didn't pull back more than the 50%. It just dropped a little bit in a little bit of like a pause, and then it just kept driving to the upside. But all of that is the gap. And then we came down to close the gap. We got there around 11 o'clock. This is what we do not want to see. So I always like to show examples of what we don't want, just to make it a lot cleaner and a lot clearer to understand what we do want. If you get a candle that looks like this, there is no trade. You can trade something else, right? You got a lot of strategies out there that you can trade, but it won't be the gap close play. So we don't want this. The good thing is, if you see this, you know automatically there's no gap close trade. You don't even have to bother messing with it. Another example on a different day. And yet again, a different example. So these are what we don't want. And another example. Also on the indexes, you can have this gap show up on the S&P and the NASDAQ at the same time, and one might fill and one might not. I remember on one of those failures that we were showing in that, one was on the ES with a failure, but on the NASDAQ, it actually had a beautiful gap close setup, and we were able to trade that close. So, look at both, don't just get hung up on one. So we can, look around at all these other things, but really until we get that CPI and we know what it is, doing any other work is basically a waste of time. No matter how bullish anything looks today, if the CPI turns the market negative, then everything's going to turn negative and vice versa. We need those numbers first. We do have a new missed VPOC, so at least we can add that from yesterday. All right, so a new VPOC. Should we head to the downside? It's so close to the roundy. I don't see how that one's going to actually add anything, right? 4802, so close to 4800. This VPOC would not offer me anything. But we mark them out, so I'm marking it out. It's just, when it comes to pivot points, a little user discretion can go a long ways to eliminate a chart that has a ton of lines all over the place. And you just get so much noise on there that you feel like no matter what the market does, it's going to hit one of those lines, and it's not giving you any directional intelligence at that point, right? It's just noise. It's so much trash. So kind of be picky about the levels that you mark out. Keep your chart and your ability to make a decision cleaner. We are working our way back up from the 10 MA cross. That was a nice pullback cross through. We can see other examples of that throughout time. We're not overbought yet, just about 0.75%. We got a long ways to go before we would consider being overbought from the 10-day. On the 10-week, we're at 3.2%. So we're a little stretched here, but it's not at a dangerous level. We can look back and see many times that we've been farther than this away from the 10. But this goes directly to the heart of what we're working on. If CPI comes in and does drive us to the upside, 1%, maybe 1.5% is about all we want to see out of the S&P today. We start getting into that 2% territory, we're going to really expand too far away from that 10-week moving average, and it's going to mean revert. So there's been a lot of talk. I guess we have time for this since we don't need to go in and pick individually what's moving this morning. There's been a lot of talk about, are we going to break this high and get into new highs or not? So this was the old high. We now have new highs, but this is it, right? This is the market. We're at that kind of inflection point. But if we look back a little bit, right, throughout history, we've had opportunities like this before where this was the high and we came up and challenged that high. And back then, we're talking about a level that everybody said was just extreme. Everything was overbought. It's way too expensive. There's no way we're going to go higher from here. And then, we're talking the S&P at 1,600. And now look at it, 4,800. Take us back to right before COVID at 3,300, right? And then the COVID drop, the recovery out of it, and we went from 34 to 44 to 48. So I get it. We're at the highs. Nobody wants to buy here, but there's a lot of buying that's going to happen here anyways. CTA funds They don't get to choose, right? People ask me all the time, who's buying this at that price? Who in their right mind wants to buy it at this price? CTAs will. They don't have discretion on when they choose to buy something. They're going to buy it because that's what the model says to do, and they'll do it. Vol control funds is another group that will continue to trade at whatever level they're at because that's what the model for their fund says to do. We continue to get more and more negative hints about how things are going out there. Today in Bloomberg, they were talking about big tech and layoffs. It was it was one of the social media companies laid off an entire floor full of people. Just eliminated an entire position within the company and got rid of everybody from that position. More and more layoffs from big names, right? The big seven, Mag 7 names. So we're going to start kicking off earnings. We'll see how it goes. But there's two sides to this that we're going to reject and fade back off of this 48. And now our range is set that we will have last year's low, not even last year, right? 2022's low. And our all-time high. And I would argue that in between all of that, 2022's low is really too far away. I don't even think that's on the table. For me, the halfback is our low that we could see. If we get, a whole year of just bad stuff happening in 2024, that would be our low, 4,700. Excuse me, 4,100, 4,171. And it would take a really bad year, right? Bad earnings, bad news, just bad stuff all the way around. We could see that number. Otherwise, I'm looking up. Clear skies. We're looking at 5,000 and then 5,150. And neither one of those even account for, say, just like what the textbooks would tell us to do, measure this and plot 50% of the range. That'd be 5,200. And then plot 100% of that range, and that'd be 5,560. Can you imagine the S&P at 5,500? It's coming whether we like it or not. Whether it's going to be, in the next 3 weeks or the next 3 months or the next 3 years. So from a pure price perspective, we can use indicators and moving averages and all sorts of things. But at the end of the day, price and reading price is just as valid as, or even more valid than any of those. We had the pullback the other day, and I was talking about how with this pullback and now with that level, that we have to come back up and get a matching high or higher. And that if we break this low, we can expand down in a whole new leg. So yesterday we continued to the upside. Today we are yet again continuing to the upside. And with CPI being so violent, I think it can easily give us this higher high. And it doesn't have to close up there. It just needs to touch up there. 48, 41 and a half. If we can get above that today, that'll give us our higher high. And that would mean that this pullback was only that. It was only a pullback. Otherwise, we are developing a topping pattern. And if we get a lower high here, that doesn't bode well for a continuation. So if you're looking at these all-time highs from back here, depending on the product that you're looking at, those could be the all-time highs. But for the ES, it's not, right? Because that high from all the way back there is 48.08. We'll just put that on the chart, 48.08. And we see prices above 48.08. So that was the old all-time high. This is the new all-time high. Yeah, they were talking about Amazon too. There was Meta, I want to say Snapchat, but I'm not sure on Snapchat, but definitely Meta, Amazon. They mentioned Microsoft. Like, yeah, it's the Mag 7, it's and if they're feeling it, right? If the Mag 7 is feeling it, these smaller companies are feeling it. I don't know what to tell you, Jeffrey. It's different brokers, right? And whether or not you have the ES versus the MES, I guess that could be it too. But if we even get out of futures and we just go look at, say, the SPX, we've got 48.18 and not yet a new high, right? So for the SPX, that would be our target, 48.18 to get to a new high. I wouldn't stress on it though, and it also could be whether or not we have the contract, adjust for contract changes. If I turn that off, does it change anything or not? And that's always a really big deal. So there's all kinds of things that can throw this off. I wouldn't stress on it very much. The main thing to focus on is whether or not you can identify your entry, get in, get out, apply analysis to the candles that you have. Stressing about this would just be a waste of your time and effort. Let's get some optionality levels while we're at it. All right, so there's the SPX options levels. Let's make this a little bigger. Here's your levels for the SPX. And for the Qs, All right, so crude's kind of shaken up a little bit on that news. It's a good start. But we're still just chopping about. Once we come out to these higher levels, we're still just sitting right in this same zone that we've been in. Nothing's really changed there. And for all of the news that came out for Bitcoin, it's not any better than it was the other day when that big push came through. So today we want to see this dollar get below 102. But really, it's all going to be CPI first. We have that auction today at 1 o'clock on the 30-year. And I would say keep your eye on the dollar and keep your eye on the 10-year. Those two things to help, say, preserve the push. For whatever direction we get today. If we get a push to the upside, we want to preserve it, continue that push. If we get a drive to the downside at the CPI report, then to continue that push. So that's what I got, guys. Watch the clock. Be careful. Be safe.